With weaker than expected US employment and services reports, the US dollar index is pricing in the December rate cut expectations ahead of next week's FOMC meeting. Hello everyone, this is Razan Hilal, market analyst with Forex.com. Today is December 5th, 2025. So I'm going to analyze here the US dollar index from a 3-day time frame perspective to minimize the noise or smoothen out the noise seen on the daily time frame. And over here we can see two key reversal patterns. First one is a double bottom formation above the 2025 lows and the strong 96 support zone, which is standing and extending below a key resistance level, which is near the 120 mark, which was a previous support to price action, extending all the way since January 2023. And if we do manage to have a clean hold beyond this neckline and the 120 mark, we might be extending gains in line with the pattern's overall target, with possible short-term resistance levels near the 101.70, the 103.40, and eventually the 104.20 full pattern potential target. Now, if this scenario plays out, then we might see the reversal of major gains seen across major currency pairs for 2025. And if you look at the relative strength index indicator, it also has a relative bullish bias as it has consecutive higher lows since June 30, 2025, respected within one uptrending trend line. Now, this is from the upside perspective. From the downside, we can also see a shorter term double top pattern also extending across the month of November and right below the critical 120 resistance level, with its relative neckline near the 98.80 mark. Now, a clear close below the 98.80 mark and further below the trend line connecting the consecutive high lows of the relative strength index indicator from a 3-day time frame perspective, we might be expecting a drop equivalent to the distance of that shorter term double top formation, possibly extending all the way down towards levels 98 and 97.50 respectively. Now, this is a short-term support in sight if we do manage to have this short-term drop unfold, and a clean hold below the 97 mark might expose the US dollar index to new 2025 lows, aligning with the 95 mark. Now, jumping to the monthly time frame, we can see that the previously mentioned reversal patterns all align within the bounds of an uptrending and parallel channel since the lows of 2008. So we're currently challenging a 17-year trend line and support at the current moment, with the current rate cut expectations and dovish expectations against the US dollar as we move ahead towards 2026. So the key levels over here that might defy that 17-year bullish bias is the 95 support, after which a clean hold may extend losses all the way down towards 2021 lows. So we'll be talking about the 89 mark for the US dollar index, which might in return boost gains across the euro dollar and the British pound towards their 2021 peaks. Now, analyzing the euro dollar and the British pound charts from a weekly time frame perspective, we can also see similar extended consolidations on the charts between July 2025 through December 2025, with a current neutral to bullish hold from a price action perspective above key support zones. So the British pound is above the 130 and below the 134 mark, and the euro dollar is above the 114.80 and below the 116.80 resistance mark. And we can also see the relative strength index indicators, the weekly RSIs rebounding neatly above the 50 neutral zones, which aligns the overall positioning of the markets into neutral to a bullish hold until we have clear breakouts beyond the resistance and support levels confirmed. So with respect to the euro dollar, if you do manage to have a clean hold above the 1680 mark, you might have extended gains back towards 2025 peaks, aligning with levels 1780, 1880, and 1940 respectively, which aligns with the trend line connecting consecutive higher lows all the way between April 2025 through September 2025, and above the 1940 mark, we can be expecting an extension for gains back towards 2021 highs. So that's near the 122.80 to the 123 psychological zone. Now, from the downside, should the euro dollar reverse back below the 1480 mark, that extended consolidation since June 2025 might be might turn into a head and shoulders formation, which might pave the way towards a reversal all the way back down towards the previous resistance, now potentially turning into a support, the 111 to the 112 zone, which aligns with the trend line, connecting consecutive lower highs between July 2023 and September 2024. Now, with respect to the British pound, it's standing above the 130 psychological zone, and below the 134 resistance. A clean hold above the 134 to the 134.40 zone is expected to extend gains back up towards the 2025 peaks, which is near the 136.80 to the 138 mark, after which we can be confirming an extension for the highs or extension for the gains towards 2021 peaks. So that's near the 141.80 to the 142 psychological zone. And from the downside, a clean hold for the British pound below the 130 critical support may extend losses all the way down towards the 125 before we can possibly witness another bullish rebound, which aligns with the upper bound of a contracting consolidation on the chart all the way since 2007. So we're talking about a previous resistance now potentially turning into support, connecting consecutive lower highs since 2007 on the chart. With extended consolidations across the US dollar index chart and major currency pairs since June 2025, key levels stand to define the next potential directional breakout across the currencies as markets shift their attention today to the Fed's favorite inflation gauze, the US core PCE, and ahead of next week's FOMC meeting.